Hello, everybody, and welcome to Bright Founders Talk at Temi. Temi is an international software development company that designs, builds, and delivers software for sustainable businesses and promising startups. Welcome to our podcast, where we bring you the most inspiring stories of entrepreneurs and experts in the software development industry. And each week, we interview successful leaders who share their unique journeys and valuable insights. I'm your host, Barry, and today we have an amazing guest joining us, Raza Ullah, who is CEO and founder at Pfida. Hello, Raza. Welcome to the podcast.
Thank you for having me.
How's your day going so far?
Very well, very busy, just how I like it.
Perfect. And on that note, just thank you so much for taking time out of your day to speak with us, because we know you are very busy. The first thing to start off with is to tell us a little bit about yourself and the company that you work at.
Yeah, so my name's Raza Ullah. By background, I'm an actuary. So for those who haven't heard of an actuary, there's not very many of us. Effectively a complex mathematician. I've worked all my life in the London financial markets. Started my career at PwC as a consultant in the insurance marketplace, moved into the Lloyd's of London marketplace, where I bounced around several different managing agencies, leading on capital modelling, effectively modelling risk for insurance companies, quantifying how much money they need to hold to stay solvent, and then moved to the Bank of England, where I oversaw regulation and best practice in the industry, particularly with a focus on capital modelling. So effectively a complex mathematician, that's my background. Back in 2016, I had a life-changing experience. I'm religious, I'm Muslim, so I went on Hajj, which is the Muslim pilgrimage to Mecca, and I had a very sort of life-changing shift perspective. And I realised that actually I wanted to try and serve God by serving people. So I actually came back from that pilgrimage and I actually ended my role as an actuary, and actually I started setting up Pfida, which is the business that we have today, really with a view to making finance fairer and more people-centric. So a bit about the name, you can see it here. It's probably in reverse on the camera, but the spelling is a bit weird. So PFIDA, people, often look at that and go, what the hell is that? How do I pronounce that, right? And the word Pfida, first of all, I'll tell you about the P in just a minute, but the word Pfida in lots of different languages means the same thing. It means sort of generally benefit or goodness. Arabic, Persian, Turkish, Urdu, Punjabi, lots of different languages. It means goodness or benefit. And the P there stands for people, because we always put people first. And that's our mission, to bring lots of great benefit to the people that we're serving. Even if it makes our spelling a little bit awkward, we put people first. So that's a bit about the name. In terms of what we do, so actually I want to rewind to 2016. Before I went on this pilgrimage, I was working at the Bank of England and I was sitting next to a young chap called Elliot. And I was saying to him, Elliot, there's not very many of us actuaries in the world. And as a result, we're very highly paid. And I was saying to him, my mission is to retire by the age of 40 with a property portfolio and live off of the rental income. And Elliot, this young 20-something-year-old new grad, literally wagged a finger in my face. And he said, Raza, what you're talking about is going to worsen the housing crisis we're already in. Whereas with an actuarial skill set, you have a responsibility to fix it. And he didn't say I have the ability to fix it. He said I have a responsibility to fix it, which really struck a chord with me because, again, from my faith background, that actually really struck a chord with me. I do feel from my faith background that where I've got a skill set, I have a responsibility to use that for good. And so I wanted to actually set up a business that serves people in a fairer way than perhaps the financial system we have at the moment. That conversation with Elliot got me thinking when I ended my role and I didn't really know what I was going to build at the time. So I rewound that conversation. I first thought about doing charity work and stuff like that. I realized maybe that's not my calling in life, and there's lots of great people doing great charity work. And I rewound that conversation with Elliot and thought, right, okay, the housing market, this is where I can make a difference. And so I started designing a new product for buying a home that was just based on pure common sense principles. What does it mean to be fair and just in a financial contract? Being of a Muslim faith background, I built it on Islamic principles, but really with a view to just building a very ethical product that should be there for everybody, for humanity as a whole, to really provide a fairer service. And what I landed on was a partnership-based contract rather than a loan-based debt. So if you imagine how a conventional mortgage works, the bank lends you a sum of money, you use that money to go and buy a home with it. Now you owe that money back to the bank with interest over a set period of time. So what you're effectively burdened with is a lifelong debt. And Barry, I don't know if you know what the word mortgage means. Do you
I
know?
do. I watched your video. I didn't know until I watched your video, and I was going to ask you that question, but I'm happy that you're going to tell me
Yeah,
now.
so many people may not know this. The word mortgage, it comes from French or Latin. You'll recognize the first half of the word, which means mort, which means death. And actually, the word mortgage means death pledge or death grip. So effectively, you're gripped by this debt for the rest of your life. If you take out a mortgage when you're 30, and you've got a 30-year term, you're 60, well into old age by the time that you actually have paid off this debt. What I've created is a partnership-based contract where there is no loan, there is no debt. Instead of us lending money to the customer, we buy the property in partnership with the customer. So just like if you and I, Barry, buy a car together, I haven't loaned you any money, you haven't loaned me any money, we're joint owners in this car. And it's the same here, right? We jointly own this property together. The customer doesn't owe us anything. So because we allow the customer to live in the property, enjoy the use of the property, we give the customer a lease, and the customer pays rent on our share of the property. That's their only obligation, just like when you're renting from any other landlord. But instead of renting the full property, you're just renting the share that you don't already own, right? And now the customer can buy us out over time if they want, but with absolutely no obligation. So you can literally choose to just pay your rent for the rest of your life. If you're happy to part own and part rent, absolutely fine, no worries whatsoever. But you can also actually buy equity from us. And just like imagine going to your landlord and saying, hey, Mr. Landlord, I really like your property. I'd like to buy it from you. The landlord might say, yeah, sure. My property's worth whatever, £400,000. Pay me 400,000, you can have the property. It's the exact same process. But with us, we say, right, instead of paying us 400,000 once, you can pay us gradually and buy installments in the property so that your partnership share gradually increases. And as your partnership share increases, your rent reduces because you're paying rent to a smaller and smaller share. And that in turn makes it easier for you to buy more partnership shares as well. And so the idea being that we've built a tech offering around this product, which gives enormous flexibility to our customers. So you can literally go into your app month on month and say, right, this month I'm just going to pay my rent because that's all I want to pay. No problem at all. Click and it's done. But now you can say, right, I want to pay my target payment, which is your rent, plus the target amount of equity you need to purchase to get to full ownership by your target term, which may be 30 years. But now here's where it gets really interesting. Imagine you've got a conventional bank mortgage with, let's say, Barclays or whoever it may be, right? Let's say your monthly payment is £1,000, which is your interest plus your capital repayment. You must pay £1,000 on the nose every single month. And let's say in any given month, you've only got £800 in your pocket. Well, now you're in default. And the bank may give you a couple of months payment holiday. And very quickly after that, they may repossess your property. Let's take another example, the opposite extreme, where actually you've been promoted and you want to start paying £1,200 per month. Well, you can't do that. You actually have to go and apply for a brand new product. You might be able to get away with paying it once, but you'll have to pay early repayment fees. You certainly couldn't do it continuously. So you'd actually have to go and apply for a brand new product, which would mean the time, the headache, the cost, the commitment of going through that remortgaging process. And I don't know if you drive, Barry, but I know when it comes to renewing my car insurance once a year, I think, God, that's my weekend gone. So imagine, the headache of having to go for a brand new mortgage product. And you don't even know if you're making the best decision until you've gone through that process because you don't have the information in front of you to understand what that looks like. So with our app dashboard, customers can see how much equity they own, how much is left to purchase. They can see their monthly target payments and how they break down. They can see their future projections and how they're doing against that. And then they can go into the app and say, right, I've been promoted. I want to start paying £1,200 per month. They input the new figure, click, and it's done within 30 seconds. No having to apply for a brand new product. No having to, even come into branch or even speak to us if you don't want to. Just how Uber revolutionized the way we manage taxi orders. That's exactly what we've done. You can completely self-serve through your app because there is no debt. All you're doing is just buying more equity from us every month. So you're free to flex your payments up and down month to month. And as long as you're paying your rent, anything on top of that goes towards equity. Now, the question is, what if you can't afford to pay your rent? Well, I mentioned how that would work with a banking product. With our product, the way it works is each time you purchase equity, you actually get certificates proving your ownership, right? Actual share certificates. So you've got tangible equity in your home. And that means if you can't afford to pay your rent, what you can do is you can trade equity with us instead. So you can sell some of your equity back to us. And that's your way of paying your rent and you're still not in default. And so what we find here, if you take an average customer with 10% equity, right, you can think of that as their deposit. If they lose their job on day one without ever having made a payment, that 10% equity buffer, as we call it, will last our average customer around 2 to 4 years. So that's 2 to 4 years of security when you're going through the hardest time of your life. So you don't have to think, God, how am I going to pay the mortgage? You know you've got the security of the roof above your head, so you can focus on what's important, getting back on your feet, finding another job, and starting to make your payments again. And this is how we're empowering our customers, first of all, with all the information to make the best financial decisions, but also with that enormous flexibility that you just don't get with a debt-based product. And that's the home buying product in a nutshell. Very radically different to a mortgage. And actually, we're finding, that the market is responding really, really positively to that. And we're getting people saying to us, why has this never been offered to us before? Why have we always been force-fed debt all our lives? And really, my mission was to show that there is a better solution to just taking on debt. We also, by the way, have a savings arm as well. So if you think of us as a new age sort of banking alternative, banks have two key functions: deposit taking and lending. Deposit taking is your bank account where you deposit your money. So we also have savings accounts where people can place money with us and get a really ethical, very competitive return, knowing that, the bank isn't using that money for anything that they might not want it used for. When you put money in a bank account, the bank actually has carte blanche to do whatever they want with that money. And by the way, I'm not down with banks at all. I totally believe banks have a real clear purpose, but I also believe that there's a better way of doing finance. So when people place their money in our savings accounts, they know that money is only being used for one purpose: to fund homes and help people out of debt rather than putting people into debt.
In terms of Islamic products or Islamic compliant products, there aren't that many out there, and people might be under the mistaken belief that it's actually only for Muslims. How do you get that message out there that it's available to everyone?
Yeah, really great question. So as I mentioned earlier, I set up the product on sound Islamic principles because of my own faith background. But really, I wanted this product to be something that appeals to anybody from any background. So, imagine you could buy your home, pay no more than you'd pay elsewhere, but never be in debt, have complete flexibility over your payments. That should appeal to anybody from any background. You don't have to be Muslim to find that appealing. Now, at the moment, if I'm honest, most of our home buyers are Muslim. The reason being, and I say this to my team quite often, you don't have to be poor to be financially excluded, right? Muslims are actually some of the most financially excluded members of society just because, as you rightly say, there's not many Islamic finance products out there. The range of products available for Muslims is very, very limited. And so when I built this product, in my mind, I knew I was solving a key problem, which is to help him increase financial inclusion within that segment of society that is very financially excluded. But really, the idea is that this should appeal to everybody. So right now, we haven't started marketing widely. Many people have still never heard of us. But the longer term plan is actually for this to be a very mainstream product. My longer term vision is, in the next 5 to 10 years, anytime someone thinks about buying a home, they shouldn't only be thinking about the main banking products. I want them to be thinking about the Pfida product. And actually, I'm not naive enough to think that Pfida is going to monopolize this market either, right? My goal is to actually spark the change, show people there's a better way of doing finance, and encourage lots of other providers to enter the market offering this type of shared partnership type finance, which I think is better for society. There's another key macro level consideration here, which is the way our savings accounts work. If you imagine when you put money in your bank account, you put £100 in your bank account, the bank lends £98 of your money on its mortgage portfolio. Now, you still have £100 balance when you look at your bank account, but somebody else now has £98 to buy a home with. So what's happened here? The bank has actually printed money. They've printed £98 because they know it's very unlikely, if you've got £100 in your bank account, it's very unlikely you're going to go and draw the whole £100 at any given time. So this is what's called fractional reserving. They know how much money is, people are drawing at any given time. The rest of it they can actually effectively leverage. So banks effectively print money to lend on their mortgage arm. And by doing that, when you print money, what you're actually doing is creating inflation in the economy, right? And if you think about it, when we place all of our savings into a bank account, which is what the majority of people do, what you're actually doing is contributing to that inflationary effect. And that is what causes the price of homes to go up. We know in the UK, house prices are ridiculous, right? It's not just the cost of the bricks and mortar and the labour that goes in. It's this massive inflation caused by the leveraging that banks create by printing money. And so when we leave all of our money in a bank savings account, what we're actually doing is pricing ourselves out of the very homes that we wish to purchase. And again, I'm not down with banks at all. Banks have a very clear purpose. We need our debit cards. We need to make payments day to day. But we need to get better, as a society, at actually investing. not just leaving all our capital idle, actually investing. And actually, that's how the Pfida savings account came about, to provide, it's actually an investment savings account rather than a deposit-based account, to provide a low-risk bank account alternative where you know that that money isn't contributing to that inflationary effect. It isn't going to then price you out of the very home that you wish to purchase. And actually, the people who suffer most by that inflationary effect are the poorest, because the wealthy people in society, they can ride out the storm of inflation, whereas the poorest in society, who have less to begin with, inflation hits them the hardest. So the macro impact of this is actually to create stability in the economy. Rather than creating volatility and massive excess house price inflation, it creates stability in the economy as well. And again, that is for society as a whole, not just for Muslims.
So now I have a really good understanding of Pfida and your products. So thank you very much for sharing that with us. What tech trends are currently catching your attention within the industry, and what are the driving factors behind their significance?
Yeah, I mean, everyone's talking about AI at the moment. It's the obvious one, GDPR, not GDPR, ChatGPT, apologies. I've got GDPR on the mind. ChatGPT and, all these deep fakes we're seeing on the internet now. I saw one recently, a Richard Branson deep fake, where he was selling some knockoff cryptocurrency, and you couldn't tell it wasn't him. I mean, if you didn't know the red flags to look out for, I can imagine lots of people falling for that. So AI is becoming scarily good now. And I've seen recently, I think it's BMW, have implemented effectively robots in their factories. And you can have a full-on conversation with these robots. I saw a video and it's scary. These robots will literally laugh at your jokes, and they will show emotion, and they will stutter. And you feel like you're talking to a real person. So, the advent of AI, I think, is going to change the world. In terms of how we can implement that in what we're doing, we're looking towards using AI to, assess payment difficulties before they ever happen. So plugging into customers' credit files, looking at micro changes in those credit files, and using AI to actually say, right, in a year's time, this customer's going to start facing payment difficulties. We can set an intervention now to make sure that never happens. So that's how we're thinking about it from our perspective. And then also when it comes to the underwriting side of things. So underwriting a home buyer is the most manual process. And once we've got them into their property, our tech, it's very, very slick, and our customers can completely self-serve. The underwriting part is still very, very manual. And so again, we're looking at how we can potentially implement AI there to take away some of that manual burden and speed up that underwriting process much more. Blockchain is another really interesting one. I mentioned this sort of knockoff cryptocurrency earlier before, but blockchain again is a really interesting, new technology. And we've been looking at whether there may be applications of blockchain within what we're doing in the world of home buying. The obvious challenge there is the ramp between, real world assets and crypto assets. But we're looking at whether there's a way that, perhaps in the future, there's a world where people can buy their home exclusively using cryptocurrency. That's again something really exciting and interesting. But I think for me, AI is both a threat as well as an opportunity. Something I'll be honest, I'm terrified of. I don't even know if I'm speaking to you really right now, Barry. I mean, you can't trust anything you see on
as a compliment.
You honestly can't trust anything you see on your screens anymore. But again, if you can harness that power for good, there's so much good that can be done with that as well.
So you talked about the tech trends there, but in terms of ongoing projects or endeavors, what are you currently looking at or what are you currently proposing?
Some of the key projects we're working on at the moment probably aren't so focused on these new trends. So at the moment, we help people buy homes, whether that be to live in or to rent out. We're looking at increasing housing supply as well. So can we actually fund the development of new properties? Because we know there's a massive shortage of housing in the UK. Can we actually reduce the carbon footprint of the homes that we're funding? So we're looking at actually how we can incentivize our customers to insulate their homes and make them more energy efficient, and whether we can work with suppliers to get a good deal for our customers and actually just make Britain's homes greener, right? So these are some of the interesting things we're working on at the moment. And then we're also looking at, as I said, I want Pfida to spark the change and encourage lots of other providers to come to the market offering this type of financial product. So we're looking at how we can help make that process easier for new entrants. I don't believe in being a barrier to entry and blocking other people. I believe competition is good for the end user, and Pfida is for the people. That's what we do. We want to make sure that the end user is benefiting. So competition can only be a good thing, and I want to encourage that, and I actually want to support that. So those are some of the initiatives we're looking at the moment. Really, how can we make things better for the people?
It's really refreshing to hear a CEO saying that they really want more competition in their market. So it speaks to your ethical stance. So it's great to hear that coming from you. How do you keep up to date with like latest developments, especially like considering the rapid change of pace in the industry?
Yeah, well, we've got a really talented legal and compliance team at Pfida, so they're continuously doing horizon scanning, looking at changes in legislation, looking at changes in regulation, and we have to, as a responsible provider, make sure we're on top of that. Interestingly, it might interest you to learn we're not a regulated provider, so there's a really good reason for that. And by the way, we've been through a 2-year process with the Financial Conduct Authority. They're well aware of everything we're doing, and they're very satisfied that we don't fall within the regulatory permit. In a nutshell, if you think about landlords aren't regulated by the FCA, whereas mortgage providers are. Why is that? The reason being, when you rent a property from a landlord, you're not taking on any lifelong debt. It's not going to ruin your life if it's not the right product for you. When you're taking on a mortgage from a bank, and that's a lifelong debt, and if it's the wrong product for you, it will categorically ruin your life. That's why mortgage debt-based products have to be so heavily regulated. Our product, there's no debt. We are effectively just a landlord, allowing you, if you want to buy our property from us over time incrementally rather than all at once. So we're effectively just a landlord. So we don't fall within that regulatory perimeter. And people quite often look at that and say, well, should we be worried about that? And I actually look at it the opposite way and say, well, that's testament to our product and how much inbuilt protection there is for our customers that even the regulator themselves don't feel the need to regulate it, right? But despite that, we have to be on top of these regulatory trends, because if we're not within the regulatory perimeter today, it doesn't mean we won't be tomorrow. Regulation is continuously morphing and changing. The other thing, again, I tend to attend a lot of industry conferences, networking with my peers. And for any founder, it's really important to be up to date with what your peers in industry are doing. And that's how you learn from each other, and that's how you grow together as well. And again, as I say, I firmly believe in cooperating with my peers and supporting each other as one big industry body, building this ethical economy together, rather than, it doesn't make any sense to work against each other. Why should we work against each other when we all have this very ethical future in mind? We all have the same end goal in mind. So, a combination of horizon scanning from a legal and compliance perspective, combination of just attending lots of conferences, keeping up to date with what's being presented at those conferences, combination of staying up to date with my peers and seeing what they're doing and making sure that we're not falling behind the pack.
I'd be really interested to hear the kind of feedback that you're getting from your customers and stakeholders. Has there been anything like surprising that they've come back with and you thought, oh, I never thought of it that way? Or were you able to like read the market straight away and knew what was coming?
So when setting up the business, we did conduct surveys, and we asked people what they want in their home buying journey, and we made sure we were very in tune with that. Interestingly, if you look at our sort of Trustpilot score, our customers are overwhelmingly satisfied with the service that they're getting. And actually, some of the messages on there, do have a look afterwards, Barry. Some of the messages on there are very heart-touching and really remind me why we're doing what we're doing. And, we not too long ago celebrated our 100th home buyer. And a chap called Dimitri, and we went and did a ribbon cutting ceremony at his house and everything. And something he said really struck me. He said, I was renting all my life and I didn't believe I'd ever be able to buy a home until I came across Pfida. And for me, that just really made me realize why I'm doing what I'm doing.
It's those personal human moments that make things worthwhile, isn't it?
Absolutely.
It's great to hear some of the feedback that you get from the customers. It all sounds like really good and very positive. Unfortunately, we are coming towards the end of the interview, but just before we go, as an entrepreneur yourself, could you give some advice to upcoming entrepreneurs who maybe have doubts about whether they should do something or how they can work out whether they're going in the right direction or not?
For me, the best advice I can give is to solve a real problem, right? Don't just jump on a bandwagon. Solve a real world problem. There's a saying, if you build it, they will come, right? Now, when I founded Pfida and built this product, I'm not going to say there weren't challenges in the road, and there were definitely times when I thought, that's it, it's the end of the road, it's too difficult, can't be done. I'm actually very close to my mum. And I remember one time, I still live with my mum, by the way. I remember one time, and that's with my wife and kids as well, one time going home and literally laying my head in my mother's lap and saying, Mum, it's over, can't be done, and literally crying. There were tears in my eyes. And I remember my mum literally stroking my hair and saying, no, you're wrong. You're doing this for the right reasons. You're doing this to genuinely help people. And again, we're religious, and she said, you're doing this to genuinely help people. God will help you. And I remember saying, Mum, that's not what this is about. It just can't be done. And, you get past these obstacles. You just have to be very persistent. And I genuinely believe in that advice my mum gave me at that point in time. If you're doing good, genuinely trying to help people, genuinely trying to serve a purpose, the people will make sure your product is successful. For us at Pfida, biggest advocates are our customers. People find out what we're doing even before they've bought a home with us. They go and tell everybody about it and say, have you heard of this company? Look at what they're doing. It's so wonderful. It's completely changing the way we think about finance. It's so people-centric. We need to support these guys. And I'll tell you, Barry, when I set up Pfida, the typical fintech entrepreneurial journey is you come up with the idea, you go to like a venture fund and you get funded, you give away a chunk of equity and you get huge money at ridiculous valuations before you've even done anything, right? I didn't go down that journey. The way I set up Pfida was the people. I told people what I'm building. I went and presented at several different, in mosques, to be honest, several different mosques and said, this is what I'm building. And it's hopefully going to benefit you and your children and your children's children. Will you help me? And actually the people, the community got behind me and said, what you're building is so important to us that we want to help you. And I had people left, right and center saying to me, love what you're doing. Here's my skill set. Let me know if you need me. And Barry, it might surprise you to learn the tech platform that we've built, and hopefully you get a feel for how powerful that tech platform is. That was built entirely by volunteers over the course of 2 years, a team of 5 software developers who had full-time jobs. They were building out our software for us in their evenings and weekends without charging us a penny, because they just believed so heavily in the good that we were creating. We had a tax barrister, a gentleman called David Southern. He's prolific. If you Google him, he's literally prolific, one of the top tax barristers in the land. When we were very, very small, we didn't have much funding because we didn't go to venture capital. I didn't want to risk giving away control and the vision. So I bootstrapped this thing very much from scratch. And I think Pfida is testament to the fact that you can do that. So there was a point when we were setting up our legal agreements and we had to get a tax opinion. And we were getting quotes from tax barristers for 30, 50, 100,000 pounds. And we went to this gentleman called David Southern, one of the top tax barristers in his land. And he said, what you're doing is really interesting, right? And for him, he's already at the top of the game. He's made his money. And this was purely academic for him. And he said, what you're doing is really interesting. I can see the benefit this will create. And he gave us this tax opinion for £2,000, which other barristers were quoting £50,000 to £100,000. And this is the power of the community. When you're doing good, genuinely solving a problem to actually help people, the people will flock to you and the people will help you and the people will be your biggest advocates. And that's why everything we do is for the people, because the people have built Pfida. That's my best advice to any entrepreneur.
So thank you for sharing your journey with us and your experiences. It's so refreshing to have an open and honest and bold conversation about what's been happening and your journey. And it's good to hear the positivity and the power of the people coming through on these ethical journeys. So Raza, I just want to thank you so much again for talking with me today. It has been an absolute pleasure.
Likewise, pleasure. Thank you so much for having me. And if anyone is interested in what we do visit pfida.com, pfida.com, and ask us any questions you like.
Definitely do it. I've been to the website. It's a very, very good website. Lovely, crisp and clear. I love it. That was Raza Ullah, CEO and founder at Pfida.